I've been getting a lot of questions about what the stock market is likely to do after the presidential inauguration. And so I went back, did a little bit of research, and figured out that really we can break it down in a couple very simple things. Number one, there's this statistic out there floating around that basically talks about that post-election years, post-US election years, tend to be at least volatile, if not outright bear markets for the stock market. So number one, there's that. Then I actually went back and I back tested this, and I found that to be very true. At the same time, if you sort of forget that statistic and just kind of think about it rationally, just like when we have a new chairman of the Fed coming in, like for example when Bernanke took office, or when Yellen came into the picture, there was an adjustment period that we needed to go through to get used to the wording of those new Fed chairs, and it's going to be the same thing for a new president. I remember when Obama became president, it was the same thing, and it's probably going to be more or less the same thing under the Donald Trump presidency. So I'm expecting 2017 to be, at least initially, a little bit bumpier because people are trying to get used to the wording or just the way of communicating in the stock market, and it's probably going to cause some bumps, probably for the broader market as well as some single sectors and industries. So here's a chart on some of the increased concerns that we've seen in the stock market over the past couple of weeks or so, just to kind of back up what I'm saying here.
So this here is the chart of what we call the skew index, or the CBOE skew index, and it's a very straightforward index, very similar to what you might know as the implied volatility index, or the VIX of the S&P 500. The skew basically measures the risk of sort of tail event moves, okay? So the risk of basically, larger than expected moves, particularly to the downside. So what we've seen here over the past, let's call it a couple of weeks, a little bit less, heading into this inauguration of President Trump, is we have seen a rise in basically the implied volatility of out-of-the-money options. What that is telling us is that smart money investors, for the most part, are buying some more out-of-the-money options. So a lot of times it also means they're buying protection. So people are getting ready for a larger move in either direction following the inauguration. So last time we saw this index at this level, it was about June of 2016, which, if you might remember, was when we had the Brexit over in the UK, when they voted to basically get out of the European Union in that sense. So that's the skew index. Again, just kind of gives us one little more, tick in the box to, think that investors are probably getting a little bit more concerned now than they initially were after the presidential election results in November 2016. Now it looks like heading into the inauguration, things are getting a little bit dicier, at least underneath the surface. And again, it makes sense. A lot of people are going to have to get used to the way the communication goes. Maybe the first 9 days in office are going to be a little bit turbulent also in terms of the changes that are going to come about. And these kind of things make sense. So I hope that makes sense, guys. Just be a little bit more careful now when it comes to the stock market as we get through the inauguration.